Today we're talking about politics and precious metals. How's it going, everybody? Welcome to Empire Precious Metals. Thank you so much for watching. If you're new to the channel, please make sure you blast that subscribe button and get the bell notification clicked. That way you get updated with any new content. Today what I wanted to talk about is essentially politics, and the reason I wanted to discuss this as it relates to precious metals is because this is often a debate that you'll see within the stacking community as to which political party is better for metals. And obviously you can look at the word better either way depending on what it is you are looking to do with precious metals. Meaning, if you're looking to be stacking precious metals, you are going to want the prices of precious metals to be decreasing or as cheap as possible. Or some people who are looking to sell precious metals, better to them would be precious metals that are on the rise, shooting the moon, fetching higher prices than ever before. So essentially it depends on how you're going to be looking at it, under which lens is better for you. For me, better as a reseller would be cheaper metals. I want right now the prices of precious metals to drop as much as possible. Now, which political party would cause this to happen? I've discussed this topic in the past, and not just based on opinion. I've actually had cold, hard evidence, data, articles, and things of that nature. Unfortunately, I do not remember which one it is or two videos that I have done. You could certainly search my catalog of videos. There's, I think, 1,100 now at this point. So if you really feel like searching for it, you're more than welcome to. However, today I'm going to have a guest on who's going to be discussing with me politics, specifically as it relates to Democrats and Republicans, as to which party has the most effect on precious metals. Is it the Democrats? Are they the ones that are causing precious metals to either rise or fall? Or is it the Republicans? So very interesting. Lior Gantz has been on this channel before. He is an expert when it comes to the economy and especially commodities, specifically precious metals. So I am very excited to have this discussion with him and for him to provide all of you some insight as to who is better for precious metals, Republicans or Democrats. Everybody, I'm happy to have my friend Lior Gantz here with me once again. Lior, how is everything?
Everything's okay. Thank you for having me back.
Absolutely. I figured a fun topic that everybody likes to talk about, which something usually I never really talk about on this channel.
Climate change.
Climate change, exactly. We actually, Lior and I were talking about the 2024 presidential election between what is pretty much looking to be Donald Trump versus Biden, at least as everything stands right now. And what I wanted to do was kind of pick your brain, Lior, a little bit about how precious metals kind of behave during an election year. And, you know, I've done some videos about this in the past, but you are definitely one of the experts in the field of precious metals and economics. So I thought it would be really good to have your take on this. So what can people expect for the price of, well, let's just start with silver, possibly. What can they expect with silver for an election year?
Yeah, I think that what's really interesting, just yesterday, I was listening to the earnings call of Blackstone. Blackstone is the world's largest alternative asset manager. Stephen Schwarzman is the founded the company in 1988. They now have over $1 trillion under management. And he's one of the richest people in the world. Net worth, I think, is just over 25 billion today. So extremely smart. And what's interesting about Blackstone is they are the largest player in real estate in the world. Okay, so they have real-time data that's superior to anything that the Fed can assemble. And I thought that what was almost shocking was that Schwarzman started the call with saying that according to their data, which already captures rental agreements 1 year forward, right? Because rental agreements are at least 1 year in length, sometimes 2 years, 3 years. It factored in with the rental agreements that are currently being signed commercially and residentially, CPI is already under 2%. Just it's super important to understand this, because in the past month, in January, all we hear from every Fed governor and president that goes out to the media is that inflation is still way too high, that it's still premature to talk about rate cuts, that you should expect the first rate cut in Q3. And yet, if you look at the CME Fed Watch tool, it's still projecting the first rate cut in March, and it's still projecting a full percentage point. So, in other words, 4 rate cuts of 0.25%, or some sort of combination that leads us at the end of the year to about 4.25.
Okay.
So, you have a huge discrepancy between the world's largest alternative asset manager, which has data that is superior to anything that the Fed can ever hope to have, because they're in the business of signing rental agreements. And on the flip, and the market kind of agrees with Blackstone. And then on the flip side, you have the Fed. I think this is the most critical point to understand, because as this is happening, you have China banning short selling on their stock market, and in Davos sending their highest delegates possible to tell the West, guys, we're open for business. Trust us again. We're putting stimulus money into our economy. You can work with us, because China was reaching a point of a really bad situation economically. So what are we seeing here overall? We're seeing, one, expectations by the market compared to real life, very different from what the Fed is telling the participants. And you're seeing huge stimulus on the part of China. All of this tells you one thing: stocks may be a bit overvalued right now, and commodities may be stupendously undervalued for what's coming in 2024. Because right now you have markets at all-time highs, and if you talk to commodities and commodity investors, they're telling you we can't raise money for the life of us. So if you're asking me about silver, I think that silver was the best question you can ask, because I think that silver actually has the biggest chance of having a tremendous year forward. I think I talked about this about 2 months ago, but to me, silver can go to between 33 and 37 in 2024 at some point during the year. It can really have a huge year, because the market's expectations for a weak dollar, or the Fed's projection for a weak dollar, are far, far rosier than what the market anticipates. And if confusion sets in because of these discrepancies, silver can be much more bullish than currently priced in, and that's really exciting. So, to me, silver is an asset that can go up between 30 and 50% this year.
I mean, that's significant. Obviously, I mean, to go up between $10 to $14-15 an ounce, that would be one of the largest, if not the largest, percentage gain I feel like that we've seen, at least since, what was it, 2011, when silver was around $48, something like that.
It had a number of good years. 2016 was a tremendous year. There are intra-year moves that silver has had. Like in 2020, it had an intra-year move of over 100%. If you're looking at January till December, then 15 or 20%. It's a big move. But intra-year, so where we are right now, around 23, for it to go to 33 or 35, but it doesn't have to settle there for December 31st. But to make an intra-year move of 50%, that's very normal. for silver, and I think that that can happen. If the Fed is really behind the curve to the degree that Blackstone believes it is, and at the same time China continues with their stimulus program that will bring back a lot of consumption into commodities, you're looking at a combo that's very interesting. And then let's talk about like a little bit about the economics, Biden and Trump. So the big difference between Biden and Trump is Trump is much more of a let's strengthen America with and strengthen our alliances worldwide, but we don't have to project our military everywhere. Unlike Biden, who is more of the belief of the Atlantic doctrine, where the United States not only needs to be the superpower, which Biden and Trump believe, the natural superpower of the world is America. But the difference between them is that Biden believes that in order to remain the superpower, you have to be militarily involved in the three major areas right now, which are Ukraine, Russia, because if Russia wins, then they go into Poland next, and that's a NATO country. And of course, in the Middle East, you have a country with imperial aspirations, that's Iran, and their interests somewhat align with those of Russia and China in the region, compared to the Emirates in the West and of Israel. So that's the second region where they're very much involved. I mean, they're as involved as it gets. They sent a nuclear sub at one point during the last 112 days, and then obviously the South China Sea. Whereas Trump was, let's put tariffs on the Chinese. Let's make this very much economic. Let's put the Abraham Accords, which are very economic agreements in the Middle East. And with Russia, I mean, he was certainly way more deterring than Biden was, because he basically told Putin at one point, if you even dare to move a soldier into Ukraine like you did in the Obama years, we're looking at something big here. So Putin was way more deterred by Trump than obviously he was with Biden's administration. So I think that the big difference between them is how much involved is going to be the U.S. military. But when it comes to precious metals, they're both China. Biden and Trump are moving the world into the same future, which is that America cannot solve all of the world's conflicts anymore. That era of a U.S.-led order that is dominated by the deterrence of the U.S. Navy, that world is over. The United States cannot police all of the conflicts that are happening around the world. It's impossible. The reason it's impossible, by the way, to most Americans, it's sort of an enigma, because you have Americans that say, "Look, why is our military everywhere? What are we doing this for? Why are we intervening?" So I want to really explain the entire economic and political structure that led us here. Between 1945 and 1991, you had literally the United States and its allies versus the Soviet Union and its allies. The Soviet Union was not forecasted to crumble in 1 year. The size that the Soviet Union was, it takes 30 to 50 years. When it crumbled in 1 year, it left such a void in American and global ideologies that America saw an opportunity, and it's a noble one, to integrate everyone, all of the world, into one synchronized global economy, and make it so that nobody has an incentive to wage war against anybody else, because everyone is enjoying life. Here we are all enjoying GDP, eradicating poverty, etc., etc. And you can argue whether this is good or bad, or if the middle class in America had to suffer because of it, because of outsourcing, and all the rest of it. The idea itself is, if you globalize, you create a world where war is the thing of the past. But in order to create that, because you always have rogue agents everywhere, you need sort of a policeman on everything. Mm-hmm. And if it's the United States, it's probably better than countries like Russia or China, or either authoritarian dictatorship or anything that's way more vicious and violent in nature than a country that could have ruled the world after 1945. It could easily have said, let's put our military everywhere. We can literally conquer everyone. We have no real enemies except for the Soviets, and it chose not to. That world of 1991 onwards, where you try to buy friends, because that's what you're doing. If you want to incorporate everyone into globalization, you're buying friends. Some of them got strong enough to where they were like, well, I love that you helped me, but I hate your ideology. I hate your being. I hate what you represent. We do not stand for what you represent. Be it the religious regimes in the Middle East, be it the communistic regimes in China, be it the imperial 19th century style regimes in Russia. Not everyone wants to just see their lifestyle go up in GDP and capitalism. It's not where all the world is. And so this great experiment is over. Now you have a fracturing of this, and countries that are more aligned with other countries are going to form the future. And in that future, the United States will not be everywhere. It will be in some places with its allies, but not everywhere. And we have to understand that because of globalization, the United States is very fragile in terms of many of the industries that it, for the sake of incorporating poorer countries, it outsourced to them without any second plan. I'll give you an example. The United States is the world's largest consumer of uranium for civilian purposes, heating and electricity for the home. 20% of U.S. households rely strictly on nuclear power. Yet, the United States has one active uranium mine that is negligible. How did you get to such a huge national security situation for the sake of globalization? And now when you take it back, you have to bring manufacturing back to the United States. When you do that, that's very costly because you've already built the infrastructure on a global basis, and it was very efficient, right? You could buy uranium from the cheapest source. The seas were open. The seas were secure. There were no Houthis in the Middle East. There were no pirates in other areas. And piracy and Houthis and everything else, that's the normal. Before 1945, if you wanted to ship anything by sea, you would meet with somebody else over the oceans. There were no fleets of the Navy that made everyone feel secure. And so we're moving back into that world where you cannot depend on supply chains. You cannot have dependencies between China and the United States, between Russia and Europe, etc. This is very bullish for the price of commodities because you have to reshore them. It takes years and years. And just think how long it takes to bring these mines into production. And so that's why I'm super bullish in general about commodities. And if you look at a commodity like silver, which is tied directly to U.S. dollar weakness, it's even more bullish.
Now, let me ask you two hypotheticals. If Trump gets elected, what do you see happening to the price of silver and gold? Do you see like his re-election becoming something that's going to cause silver and gold to just, shoot up and take off? Or do you think that's going to be something that is going to cause the prices of precious metals to drop? Because a lot of people will usually make an argument and they'll say, oh, having a Republican in office is better for the price of metals, or having a Democrat in office is better for precious metals. But when you look at the historical data going over, 40, 50 years or what have you, it didn't really seem to be that there was any direct correlation between one over the other. It just happened to be based on the actual president's economic policies. But I'm curious if you think, just looking at 2024, Trump getting into office or Biden, have your pick, which do you think of the two is going to cause precious metals to move upward?
I don't think the correlation between who's in office or which parties, even in office, will determine that.
Thank you. It's because that's what I've said in the past, and some people, they like to argue it, and I've put up the charts.
You may have a one-day move, a reaction.
Yes.
But what's really important for gold is real interest rates. And real interest rates have gone up tremendously. Gold formed a bottom at 1,683 an ounce. And since then, it's toyed with its resistance 4 times already.
Mm-hmm.
All 4 times are higher than the 2011 high. And so you're forming a beautiful resistance line at 2,070 an ounce. Once that breaches, the size of the move is probably between 600 and 800 an ounce.
Wow.
So you're talking about going between 26 and 2,900 an ounce for gold, and not moderately. It's going to rally in that period, because you're breaking the all-time high, you're breaking the paradigm for gold, and it's going to rip. When gold goes to around 25 to 2,900, silver obviously moves with it, and I think that the ratio you should be looking at is about 65 or 70 to 1. So with gold at 25 or 2,600, you're talking about silver 33 to 37. It makes perfect sense.
Mm-hmm.
And I think that silver will actually move first in terms of percentages. In other words, it will start to lead as we enter the bull market. In other words, once gold does break the 2070, silver will start outpacing gold. They'll both be in a bull market, but because the bull market will be so with high conviction, and you'll see big flows of money into the metals, silver will start leading because it's such a small market compared to gold. It really is a very small market.
I think it's going to be very interesting. As a dealer, for me, I'm just kind of sitting back and just watching and waiting to see what's going to happen, because if gold does, let's say, hit 2,600 an ounce, 28, 2,900 an ounce, and silver does hit 33, 35, $37 an ounce, it's definitely going to shake up the marketplace, just from the stacking perspective and the people that are going to be able to afford the precious metals. Because right now, in and of itself, 1 ounce gold coins, people struggle just to be able to buy the 1 ounce gold coins, right? So people are buying, fractional stuff, 10th ounce, quarter ounce stuff. So if you see the prices skyrocket to, those figures, as just somebody that deals in the physical form of it, it's going to shake things up. So I know a lot of dealers. Go ahead.
And it's also another reason why silver will outperform gold.
Yeah, because it's more affordable. And I've noticed this just as, again, somebody who's buying and selling, hundreds, thousands of ounces every year. People can definitely afford a $35, $40, $45 1 ounce collectible piece or something to add into their stack, as opposed to buying that 1 ounce gold piece. It's going to be interesting, and it's going to definitely change the way some of the online retailers operate. But I really do appreciate you once again coming on here and taking the time, and I'm relieved that you agreed with the point that I have made in previous videos. So now I can, talk to some of those people and say, I told you so. Like I had an expert on today and he agrees, but we're going to have you on again, real soon, again, maybe in another month or two. We have other topics that you and I have emailed about that we could discuss, and, definitely when election day rolls around, I mean, we're definitely going to have you on for that, because that's going to be interesting to say the least.
Absolutely.
But Lior, thanks so much. I'm going to put a link down below for everybody. You got to check out the Wealth Research Group, and Lior has a tremendous resource bank for anybody that's looking into all things precious metals, commodities, uranium, mining stocks, economics. And, Lior, again, just pleasure to have you on.
Thank you very much.